What's going on, everybody? It is just after 11 a.m. Central Standard Time here on, what is today? Friday, the 27th of June, 2025. I guess first thing is I'm running this from my laptop here, from my MacBook. And so this is the first time doing this. So let me know that you guys can hear me all right. And then we'll jump into this. All right. We got some charts to look at today, do some requests and stuff like that. So yeah, if somebody could jump in there and just let me know that you can hear me or not, that would be great. And we'll get it figured out. And then we will continue on here. So we'll kind of see here if anybody, you can hear me. Okay, great. Yeah. Hey, Alexander, good to see you, man. I'm all right. For those that don't know, I hurt my back this past weekend, and so I ended up in the ER on Saturday, and I've just started kind of getting back into things yesterday and today. So I've got limited time, sitting at the desk here as my back kind of hopefully heals up. But man, oh man, I wouldn't, those of you, I know a lot of you kind of contacted me and said you've had back pain before. Y'all know, man, that's nothing you'd want to wish on your worst enemy. Honestly, it's absolutely awful. So we'll see how it goes here. Also, like I said, I'm doing this from my MacBook, so I might be a little bit slower moving things around here, just trying to get used to it all, because I still haven't got the video issue figured out with my desktop since I was laid up for the last basically 5 days until yesterday. So thank you. Yeah, I appreciate it. So how are you guys doing? Matt, what's up, man? Good to see you. Haven't talked to you in a while. But yeah, so I guess the big question is, did you buy the dip? So we've got the NASDAQ, we've got the S&P hitting new all-time highs. We've got Bitcoin kind of just pulled back here a little bit, but getting pretty close to its all-time high as well. There's been 3 points here over the last, I guess the last almost a year, since August 5th of last year was the first one, where people have said, listen, it's the top, right? They've said that, right? Oh my God, it's the end. Remember August 5th, I believe it was August 5th of last year, that they said, okay, it was the carry trade unwind for the yen. And they're like, oh, it's the end of it, blah, 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 right? And remember, I came on here and I was like, no. If it had been, then that Monday, we would have limited down, and instead we rallied up, right? And so since that time we had that, we've had two more times now. Most recently here, what was this? I guess just this past week or so with that dip down there was the third time, right? And so, you've got people out there that are continually crying wolf, right? They're continually saying, oh my God, it's the top. The top is in. And, I've had Fibbo on here, and I know it's been tough lately, guys. Fibbo really feels bad about it. He's had to pick up some slack on some people there at work who've been out. So he hasn't been able to come in on the Fridays, but he said next Friday he would be open. So I wasn't going to do a stream next Friday because it's July 4th, and I've got that week, that July 4th weekend out there, but we're not doing anything until later in the day that day. So I'm going to actually do a live stream next Friday, and Fibbo's going to be a part of that. All right. But Fibbo and I, we've been very clear about it, since the bottom, really, guys. Let's be honest. Since that, 16,000 area, we've been talking about how, we're continuing upside, and we see nothing saying on that macro picture that we were looking for, there to be a low or to be a top coming in and for us to go into a bear market. And so here we are again, like I said, again, the question, the only one question, did you buy the dip? Have you been buying the dip? And hopefully that's a yes. Hopefully it's a yes. Okay. Crypto Chewy, man, what's up? Yeah, I see you there, man. You need to come back in, man. You haven't jumped back in with TWC here. Because we were getting you, set up under the new account there. So you need to jump in there. But anyway, so yeah, we continue to go up higher, right? And you've got, I guess what I want to say, guys, is this is really kind of the difference, not just in experience. Myself, I have, this is my 31st year. Fibbo's got something like 25 years of experience as well. So it's not just experience, but it's also the way in which we understand markets. And so, we've always said, listen, nothing's happened on the macro at this point that says that the top is in, so we should be buying dips. And then we kind of give you a little bit more. We say, well, but if this happens, this other thing happens, if we go to this area, if this thing happens, then okay, there's a good chance that the top may be in, right? So we kind of let you know, listen, nothing's happened yet, so you should be buying that dip unless this other thing happens, right? And had you been listening to that, of course, you would be doing well up to this point. And so hopefully you have. So now, like I said, so today we have, I guess it was yesterday the NASDAQ made a new high, right? Today, the S&P made a new high. Again, Bitcoin is kind of sitting in there. So we'll take a look at that Bitcoin chart. We've got a lot of great stuff going on at the Academy. I've done something recently. I've trained an AI on the way that I read markets and whatnot. And so most mornings now, we get a 3+3, which is 3 stocks and 3 cryptos that have the best likelihood of a positive intraday trade. So you can make money on it, right? We give you the entry level, the stop level, the targets, target 1 and 2 and whatever with that. But it's based on my knowledge and how I read markets, and then catalyst events that may or may not be that may be happening overnight or into the morning or that day or something. So like today we had Palantir, we had Nvidia, and we had Nike today. I believe we're the 3 stocks. And then I don't remember who we had for the cryptos today. But so we're kind of testing that out now and kind of posting that each morning for people to kind of take a look at and decide if they want to jump into that, just to kind of give them, these 6 opportunities to day trade, when they don't have the opportunity to find all these themselves. So, Nike is 18% push to the upside today. Yeah. Nike did really good today. So had a good bit of going on there. Andrew, you guys see Andrew Bennett's here in the comments. He's posting a lot of trades in there as well, guys. And Vince as well. Vince really focusing a lot on some Bitcoin trades. And I guess S&P minis or micros trades as well. So we've got a lot of good rounding for everybody. And we're trying to give everybody as much opportunity as possible to find good trades and to go in with it as well. And then, of course, every night, I do my market wrap where we usually have about 20 trades or so between stocks and futures and crypto as well. And then, of course, Bitcoin a few times a day. And then we have what do we have? Something like 13 to 15 futures, crypto setups that we keep track of every day, that we update daily. So there's a little bit of something for everybody, depending on how you want to trade in there. And so it's doing pretty well. We're doing pretty well here. But yeah, so let's go ahead and jump in here. Let me see here. Let me pull up. There we go. Let me get me a little bit lower here. So this is kind of what we're looking at for Bitcoin here right now. Okay. And I've got to do this because it's my Mac. I can't look at the screen there and see what I'm looking at. So hopefully y'all are seeing it well here. But basically what we have here is we have this range, right? And so what it looks to me is we have this selling climax into this, this basically looking like a reaccumulation range here with a nice spring down here. So a really nice spring dip down here. And so what were we looking at? Well, I had been talking about this idea that maybe we might have a triangle, right? Like A, B, C, D, and potentially an E here. And what I said was, listen, if we broke down below this wave, this would have been wave A here, then we were looking at one of 2 things, either just a sweep, maybe 98, 99,000 or so of that 100K area, or a movement down here to this monthly S1 pivot at around 94.5, 95,000. And that was what I was looking at, right? And so what did we get? We got the sweep here, which gave us this spring, followed by this nice bullish engulfing candle, right, on greater volume, which we love to see, and then some follow through higher here. So we got this nice spring here and this rally up, and we're just kind of hitting this descending resistance here, looking for this pullback. Now, based on the height of this right here, right, based on the height of this pullback, we've actually got about, depending on what chart you're looking at, around 119,800 is the pattern target. But what's going on here locally? That's the question. And so when we zoom in there, let me see here. As we zoom in there, we're kind of looking at this as possibly a 1, 2, 3, 4, and then a 5. It may be like a flat here, and so maybe some further pullback. Right now, we've got lower highs and lower lows, which is what we want to see with that. But there he is. I'm going to tell you right now, we got a lot of volume coming up on here. So it's possible that what we may actually have here is like maybe a 1, 2, and then this finishing off a 3 here, and this being a 4, and we get a 5. So one, maybe possibly one more push higher. And so based on the height of this pullback, maybe a push up there around 109, 350, 400, again, depending on what chart you're on, which should get us right around this descending resistance here. Let me set that back up correctly there. So the idea is usually what you will get is you're going to get 5 waves up into that descending resistance to give you your first big wave. Then you have a 3-wave pullback. And then your wave 3 is going to be that participation wave that breaks out. So right now, whether we continue to pull back here or we rally up into that resistance and then pull back and then break out, either way, this low should be in. We should be looking for a breakout. We're going to confirm it on a breakout above this swing high right here. So on this chart, that's 110, 617, and 3 cents. We break out above that. That confirms this is 3 waves on the pullback, which is corrective. And you should be looking up toward 119, 120,000 plus. Because here's the thing. If this is 1, 2, or this becomes a 1 and a 2, 5 waves up is actually going to get us above this 119,800. It'll get us closer to probably around 125 or 126, 124,000 minimum, right? Because you're looking at this current rally up off that spring as a wave 1, and then we're looking for that pullback for that wave 2. So again, we've got NASDAQ new all-time high. We've got S&P new all-time high. The Dow's a little bit further back, so it hasn't hit a new all-time high yet. But then we got Bitcoin here, looking to follow along and do the same thing. Okay, so that's what we're looking at. That's what we're looking at. And so if you're sitting here scared right now and you're thinking, oh my God, what if it goes down? What if it goes down? I don't know what else to tell you. I've got a track record. I mean, you can follow that. And especially when it comes to the macro, I'm pretty dead on. And so, I've been pretty not bullish just to be bullish, but I've actually explained it every time why we weren't bearish, why we were looking for further on, right? And so that way it's not like, oh, he's just bullish because he's bullish, right? It was like, okay, well, here's why. Here's the reason being. And that, that helps you. Because what I don't want you to do is just to believe me just because I say something, right? Do you understand what I'm saying? That doesn't make a whole bunch of sense, right? Why would you believe something just because somebody believes something, especially somebody online, right? I mean, there are other people out there that do have a lot of experience. They have, multiple decades of experience and have called tops at different times as well. There have been people using on-chain metrics to call the top, like the last time, right? What's his name over there? I can't remember which one it was, Glassnode or something, was saying, oh, well, this particular on-chain metric says the top is in. And then he came back and said, okay, well, I was wrong, blah, blah, blah. But this is why I teach what I teach, because on-chain metrics aren't going to do it, guys. Just your fancy indicators, your one-off indicators, things like that, they aren't going to do it. They're not always going to be, correct. But the more that you understand about how and why price action moves the way it does, right? How and why the market moves the way it does, the more, the better those particular indicators and things, the more useful they can be to you. Because if you don't understand this thing that I talk about, which is how and why markets move the way they do, then you're just left to kind of, well, maybe the indicator will be right, maybe it'll be wrong. And everybody thought, all on-chain indicators, that was the thing, right? Because it's on-chain, all the information's there, blah, blah, blah. And then as we just saw with this, with our most recent all-time high there, I believe is where it was, that it's not always it, right? And I say this because a lot of you that come in here and listen, and join in, are new to trading. You're new to markets. And the first thing when you come in and you start finding these indicators and people show you a few times that they work and you start thinking, oh, they're going to work all the time. And they don't really, right? You have to understand how to apply them. So again, the more you understand about how and why markets move the way they do, the easier it is to apply whatever indicator you want to use. And you can look at it and go, is it going to be more likely correct this time or more likely, incorrect? And then that just helps you, either stay in and make more money or get in or look for that pullback rather than thinking, oh my God, it's the end of the line and we're going down. Because if you're emotionally bouncing back and forth between the top is in, the top is not in, the top is in, you're going to find it really difficult to make any meaningful, lasting profits, right? Because you're going to get yourself out of positions that you actually got in good at, right? And then it's going to be, maybe that one was a really easy position to get into. Or maybe you just got lucky and you just were like, I'm going to try it. And I got in. Oh my God, I did so great. We've rallied so well. And then you get out and then the next entry is more difficult, right? I mean, let's face it. Every one of y'all would have loved to have gotten in around 16 or 17,000 at that November 2022 bear market low for Bitcoin, right? And you would have loved to have just held on this entire time up, right? No stress, no mess. But how many of y'all actually did that? And more importantly, how many of y'all did that with size versus kind of chasing along the way and trying to get in along the way? Because then you have to fight, right? You have to fight these large accounts that are out there talking about, oh, the top is in, oh, it's going to go down. I mean, it's happened the entire time on this way up, right? Every single sideways we've had here, they've been swearing up and down to you that it's the top, right? They swore to you that this was the top, and this was the top, and this was the top, and this was the top. And then when this broke out, they swore to you it was going to pull back and retest. And I said, no. I said, with the length of time it's been going sideways, we're going to get an accumulation on the rise, which is what we got right here, and continue on, right? They told you this was the top. They told you this was the top. They told you this and this were the tops, right? Oh, and they were really convinced up here. But what did we get? We got 74, and then boom, we just retested the previous resistance and support. What did we do here, guys? All we did was this previous all-time high, we nudged up a little bit, continued to build a bigger base, broke through, came back, retested, and took off again. What are we doing right here? Effectively, right here, guys, we're doing the same thing we did right here. Right? This little part we're in here, this little sideways we're in here, and this pullback we had, look at this. You got the same kind of double top looking thing that you had here. You got the same sideways just beyond that we have right here. We pull back. Where did we pull back right here? Look at this. Right here to this previous kind of support area, resistance support area, right? Where are we pulling back here? Right to this previous resistance support area. I mean, this is basically just a mini of this right here. But you've got everybody out there trying to convince you that the top is in. You don't want to be that person, right? You don't want to get caught up in that. And it's difficult at first when you're first learning how to trade because you don't really know what you're doing. And so not only do you not really know what you do, but then you've got the large accounts out there screaming, and you got multiple accounts out there screaming. And a lot of it sounds like it makes sense, right? And it just makes life difficult. But this local area is just, again, it's just that same as that big area we have right here. That's all we're doing right here. So we're looking for this to continue up higher. Again, we're still looking at least 170, 180,000, likely, beyond 200,000 for this. And that's without even a real blow off top coming up there. All right. So what does that mean for, let's see Ethereum here. Okay. People asking me about Ethereum. So let me do this. Let me open up Ethereum here. So locally on Ethereum here, here's what we have. This is what we've got on Ethereum. And so again, looks like we've just got a spring here. Support at the yearly S1 pivot, just like we like it. We've got a nice base, almost a hammer candle right here. They'll pull back and a nice move back up. We broke out through that descending resistance. Now we're at a range sideways here. So as long as we can get out above this, and this is Ethereum USD here on Kraken, so that's the chart here, but wherever your chart is, this is the 12-hour chart. So this particular candle here, it's around 26.79 on here. If we can get that, breakout there, well, at that point, we're looking like we've got a wave 3 in progress. And that wave 3 has got a minimum expected target up here of 67.8250. But all we've done here is just gone sideways. I mean, really effectively since over here around the 10th of May, right? All we've done is kind of go sideways. And this just kind of builds up that, that tension, right? It builds up that the longer you go sideways, the larger and bigger the breakout becomes. So we've got the yearly pivot right here at 3,100 or so. So if you can get a weekly candle, impulsive breakout and close above that 3,100, that should indicate that the low is in. So this is good. We came in, get up near the yearly pivot, pull back to the yearly S1, get that breakout. That should indicate we're going to head up at that point. And that seems to align kind of with where we're at right now on Ethereum, right? And if you're a believer in Ethereum rallies and altcoins go with it, well, hey, that should make sense, right? And you should be like, okay, well, I'm looking at other alts. We've been looking at a lot of alts lately, over in the academy. A lot, and we'll talk about a few of them here. But, just looking at some general structures that are applying across a lot of them, because you don't have to look at the exact ones you want, right? Just look and see, okay, is the one I'm looking at, does it look like the structure here? And if it is, you're looking for the same kind of movement because they tend to move in tandem, right? So you have a few different structures basically across pretty much all of your altcoins. And you're just looking for that structure that kind of makes sense, right? It kind of looks like the other one. So let's kind of jump into it here. Let me see. Oops. Yeah, let's jump in here. So here's TIA. Now, this is what a lot of these structures are looking like right here. So you've already had these runs off these lows back here, most recently here, about a week ago, right? So on TIA, that gave you almost a 30% run on that. And so TIA, that's from the upside there. So we'll just kind of stick here since this is the 4-hour chart that we're looking on here. But right now we're kind of looking at this as, 1, 2, 3, 4, and 5 done. So we need a breakout here above the $1.60, 1.602 on this Coinbase chart, TIA USD. And if we can get that, that should indicate that wave 3 is in progress, and that has a minimum expected target up there of $2 and almost 12 cents. That's just wave 3, right? Wave 5, minimum expected target of about $2.33. But what you're going to see is you're going to see a lot of these that look pretty similar. You can see we pulled back just beyond 70.5% here. So just beyond that, not quite to the 78.6. We want to see that move up there. Take that out, and we should, for all intents and purposes, should continue up toward that $2.11 area. Okay? My chart screen is frozen. Ooh. Let me see here. All right, guys, give me just a minute here. Try to pull this up. Sorry, guys. There we go. You should be able to see that now. Once I pull this up. There we are. Yeah, unfortunately with the Mac here in the browser, like when I use my desktop, my Windows machine or Linux machine there, it'll let me look at each of the different tabs. On this one, it's like just share the one tab. And so it's just being a pain in the rear end. So I'll probably have to do this. I don't know why it changed to Ethereum and then not for TIA here, but we'll see if I can keep it going without opening a new tab. But anyway, so again, as I was saying here, the pullback here, again, looks pretty much like we got 5 waves up. Looks like we got A, B, and a C here, just beyond the 70.5. And 70.5 is my favorite, my pullback, right? And so again, if we're getting above this wave B here at $1.60, good to go, right? If you are more risk tolerant, guys, and you like the way this looks, I mean, you could jump in here, say it right here, right? Just put that stop loss nowhere else. Just put it like 1 penny below that swing low. 1 penny below there, right? And all of a sudden, you enter and do this right now, and if it gets up there to that wave 3, you're making an $11 trade. That means you're making $11 for every dollar that you risked. To get that minimum expected wave 5 up here, I mean, you're making almost 15R, guys, 14.68R. So $14.68 for every dollar. Now, this isn't going to happen overnight, but, when you're looking at, well, what do? I want to make as much money as possible when I'm trading, okay? And the problem is, what we tend to think when we first come in as traders is we think we need to make more trades, right? To make more money. The reality of it is you need trades like this, trades where you're able to get in near the bottom and you can ride this thing up, right? Because listen, here's the thing. This is just 5 waves up here, right? But then what are we looking at? Once you make these 5 waves up, you're going to get another pullback, right? 5 waves up gives you a larger wave 1. And so instead of just stopping there, you potentially looking at something like this, and you'll get this pullback here, right? But instead of the 14.6, right, you just put it in there and you don't worry about it and you let it go. Now, 3 of that larger wave up is now 50R. Up here on wave 2, or I'm sorry, wave 5 up there to get 5 waves fully up, that becomes 68R. That means you're making $68 for every dollar put in. Now, why does this make a difference? Because if you're constantly trying to get in and out of trades, right, there's more chance that you're going to get them wrong, right? Being wrong is part of trading. I've been doing this 31 years and I still get it wrong. And I don't hide that. In the academy, I talk about it all the time. You have access to all the trades we've done. You see when I've gotten it wrong. Because I never want somebody coming in and thinking that they're always going to be right, or most of the time they're going to be right. Most of the time, you're not going to be right. You're going to get points at which, points along the way where you're going to be right more often than you're not. And then you're going to have points along the way where you're going to be, unfortunately, wrong a lot more often than you're not. Which is why I emphasize proper risk management so much. That is your end-all, be-all to trading, is proper risk management. Okay? So it's important if you can figure out where these lows are, because you only have to put $1 in there to potentially make $68. So you can turn $100 into $6,800, right? Now, let's say you've got $1,000 to put into trades, and you can do that across 10 trades. Well, all of a sudden, you've got a chance to turn that $1,000 into $68,000 or even more, right? And the best part about it, remember what I talked about at the beginning, how many of y'all would have loved to have been able to get in at Bitcoin at 16, 17,000 around the bottom there, right? Now, we've done this multiple times over the last few years, not just in crypto, but in stocks. Everything, crypto, just multiple ones. Again, I talked about the Ethereum low being in June of 2022. I talked about Bitcoin low being in November of 2022. And again, this is all, available everywhere publicly. PayPal, I talked about PayPal on X, and I said, it looks like we're probably around the bottom here. And if it goes down, it'll go to 45, but we're probably right there, right? And that was the day it made the low, right there at around $50. And it's been up since then, right? I talked about Square. We've done Square. We did Robinhood. Andrew, correct me if I'm wrong. Robinhood, were we somewhere around $7 when we talked about that? Andrew remembers this one because him and I were talking about this one back and forth a lot when we were building the base. But we were in there at around $7. The DX, yeah, Alvin, talk about the DXY, exactly, DXY. I talked about that bottom when it was 88, 89, and I gave it a 114 to 115 target. What did we do? We hit 114.7 or 0.8 or whatever. And there I gave us, I said we were going to break down below 100. And here we are at 97, right? What else did we, and I don't say this to kind of brag, guys. I say this because I'm trying to say I know what I'm talking about, right? And you can know that too. It's not some big magical secret. Stop falling for people that tell you there's all these secrets that you need to know about trading. There's no secrets. It's just understanding how and why markets move the way they do. Now, people can call it a secret because they don't want to listen and they want to argue, because when we come into trading and we start getting all the free stuff online, it's the same regurgitated nonsense, right? Most of that's going to be half-truths and outright lies. And not because people are trying to lie to you, but just because that's what they learned. And it's not that it's correct, right? Because it's easy to build an audience with social media today and to monetize that audience than it is to actually trade, right? It's easier to make that audience. And that's why you'll see people like, I don't know, the crypto capital person or whatever, who is, missed most of the downside coming into, November of 2022 and missed most of the upside over the last few years with Bitcoin, right? It's easy to get caught up in this emotional thing where you constantly think, oh God, it's got to keep doing whatever I think is going. And you start doubling down and you keep doing that. So what I'm trying to get at is you are going to make more money, infinitely more money, learning how to potentially find lows like this, right? And just letting it ride. And you don't have to put everything in it, right? You just put some in, you find another one, you find another one, you find another one, right? And now it's really easy with crypto because crypto tends to work together, right? Alts tend to more or less work together. Your alts more or less are going to find bottoms around the same point, when they cycle. And so when you learn this, because I know a lot of you are just really interested in alts, this allows you to get in with a lot less risk, right? You are risking $1 to potentially make $68 here on TIA. Now, can I guarantee you it's going to do this? No, I can't. There are no guarantees in trading other than you're going to lose money from time to time. And the newer you are, the more money you're going to lose and the more often you're going to lose it. That's the only guarantee there is in trading, okay? Again, which is why I emphasize proper risk management so much. Don't YOLO. If you're YOLO, you're gambling. If you're gambling, at least go to a casino to do it where you can have free drinks. If you're gambling out there with money, they'll give you free drinks, maybe tickets to a show if you get a little lucky along the way. If you get really lucky, they'll comp you a room. If you're going to gamble, do that, okay? Because here, you're not getting any of that, and if you're gambling, you're likely going to lose your money. I mean, all but guaranteed, okay? So at least have an experience with it if you're going to gamble, right? But if you're serious about trading, that's where the fun comes in. But you got to be patient, right? Like I said, if this is going to rally up to $68, it's not, or up there 68R, right? To get you $68 for every dollar you put in there right now, right? If it's going to do that, it's not going to happen overnight. So you got to have patience. But you can find multiple situations like that, and some of them are going to do better than what you think they're going to do. And it's easier to be in the trade and to handle the pullbacks along the way because you have a larger cushion, right? It's much more difficult. Like let's say, where Bitcoin was, right? I can't pull it up here because it's not going to let me pull up that chart. But where it came back a few weeks ago at that low, if you bought that low and now you're getting a pullback here before you're getting a breakout, you might be thinking, oh, it may not break out. I need to go ahead and lock in my profits, right? But if you bought, say, the 74,000 low, then this current pullback we have, it's like, hey, it's not a big problem. I've got room. I've got time. I've got a lot of profits in there. I can let it, emotionally, I can let it move against me a bit. Get on there, stupid thing. My computer's fighting for custody of my charts here. Let me see here. How will token unlocks impact the price on TIA? I don't worry about that, to be honest. I don't worry about it. You can think about it this way. What's the biggest thing that people have been talking about token unlocks for forever? XRP, right? How high has XRP gotten so far? Over $3, right? And it's probably going to get over $5 this cycle. With all those token unlocks. The token unlocks, if anything, are going to be a temporary, a knee-jerk reaction, right? Your trends are already established. So news events like that, events that are happening like that, tend to just be a knee-jerk reaction, limited time. So, again, I wouldn't really worry about it a whole lot. I would worry about the charts. I would follow with the charts. Because the charts are listen, the way that Fibble and I, and this is the reason why I brought Fibble in with TWC, right? And the reason why he came over to TWC, because we both view it the same way. And the way we view it is the mood, right? The social mood. What are people in general feeling, right? Are they feeling more risky, less risky, right? And the easiest and fastest way how people are feeling is the market, because they can put money in or take money out immediately, right? So the quickest, fastest way you can understand how people are feeling is what you see with this market here, right? All the other stuff, all the government news events, employment, all these things, they're all secondary. They're all telling you what's already happened, right? But guess what? There are people involved who already know what happened, right? You've got business owners. You've got statisticians. You got economists. You got all these people, right? And so this social mood is this aggregate understanding of what people in general are feeling. And that shows up in the chart, right? So when they get the news events, whether it be, again, unemployment, stuff like that, or it is even like Mr. Brian here was asking about the token unlocks. These are all just news events. They don't determine the trend. They determine some knee-jerk reaction along the way. The trend's already established. So that means you have to zoom out a bit, right? Which is why when I talk about Bitcoin, I don't normally with y'all here on the weekly talk about, nearby price action. I might mention a little bit, but really we focus on the macro picture, right? Because you're with me once a week on a Friday. So we just focus on the macro picture. And as long as that macro picture is intact, it hasn't broken down. We haven't got clues coming out on the macro picture that that top may be in, right? We don't worry about it. We don't read things like double tops. We don't usually look at stuff like that. Why? Because for the most part, your success with those things is not going to be very good. Why? Because think of it this way. Retail traders, okay, which is what we all are, right? So generally speaking, 95% of retail traders never make money in the markets. 3 to 5% may make money in the markets, okay? Now, the same thing you talk about when you're looking at things like double tops and cup and handle and head and shoulders, some generic maybe it looks kind of like a triangle pattern, right? As opposed to a proper Elliott wave triangle, right? When you look at these price action patterns, that's what most retail traders do, right? But yet most retail traders don't make money in the markets. You see what I'm getting at here? If you want to make money in the market, you have to do what most retail traders aren't doing. And if you can do that, life becomes a lot easier. But you have to get over that, right? And it's difficult. It's difficult if you're new, because you're new and you come in, you think, okay, well, I should be able to do this by myself. I shouldn't need to learn from anybody. Some people can. Not a lot of people are successful consistently without some sort of mentor, right? It's the same way it is with just about anything, any skill you want to learn, right? There are some people that can learn on their own. I was not one of those, right? I'll be honest with y'all. I was not. I learned it on my own and I got some stuff, but it really wasn't until I got a few mentors along the way that I really excelled. And it made me excel a lot quicker, a lot faster, and a lot better, right? But maybe you can. But the problem is you have to go through a lot of the ugly crap stuff that's out there, right? And like I said, most of what you find for free online are half-truths or outright lies. And a lot of it that is true, you don't have, just starting out, you don't have that knowledge base and that experience to understand how to apply it correctly. And then on top of that, you don't understand what is proper risk management and how to do it. Okay? Sorry, guys. Give me a minute. I'm going to turn on my air conditioner a little bit more here. All right. So, these are just some things to keep in mind. I'm not telling you have to learn from anybody, guys. Now, obviously, if you want to learn from someone, I think learning from Fibbo and myself is probably the best place, absolutely, that you can learn. Because, we kind of talk a lot about, actually why price is moving, not just that it is or where it is, right? But maybe you can. But if you're going to try and learn on your own, what I need you to do is I need you to understand that most of what you find online is going to be a half-truth or an outright lie. And that part of stuff that is true, you likely don't have the experience just yet to apply it properly. So your first thing you need to do is to learn proper risk management. Okay? You need to learn proper risk management, period, end of sentence. Because that's going to keep you from losing your butt along the way until you start learning properly, until you start understanding what's going on, which really comes a lot from experience. Okay? So, with that in mind here, let me show you what you guys here. You have to figure out who you are as a trader too. You think you know until you realize you don't know. 100%. So something I used to always talk about to new traders, and I still talk about it a lot, is you have to figure out who you are as a trader or investor. Okay? What does that mean? This means this is where you have to be 100% honest with yourself. What is your current financial and wealth positions? You have to be absolutely honest. If you're just making it paycheck to paycheck, you got to be honest about it. If you have no assets, you have to be honest about it, right? Because then you have to figure out what are your immediate, mid, and long-term financial and wealth goals. You have to do this work, guys. A lot of people want to skip through this. You have to do the work. Now, once you know those things, then you can sit here and go, okay, well, how many hours a week can I really devote to trading? I'm not talking about working your job and pulling your phone out in the middle of your job and trying to trade on your phone. Don't do that crap. You're going to lose more money than you'll ever make. Okay? Are you free every evening from 7 to 10 p.m. and then on the weekends? You have to decide how many hours do you realistically have. From those, you have to decide how many hours do you actually want to trade. Okay? And then you have to say, okay, do they align? You may have 40 hours a week that you can trade, but you may only want to trade 10 hours a week. That's going to change the way in which you approach the market, right? You're going to want to probably zoom out to a larger time frame, take a little bit longer trades if you want to trade less hours, or if you have to trade less hours because you have work and family and all these other things. All right? You have to figure all this out. All this is going to tell you, first and foremost, what time frame and how you should approach your trading. Now, let's say you you want to trade more hours, but you got a full-time job, you got a family. Okay, well, that's fine. So what you do is you start with what you have available now. You put in the hours that you can put in. And as you get more and more successful with it, you're going to build up, a base, a capital account that allows you to potentially be able to change your work situation so that you can trade more hours if that's really what you want to do. But where I see a lot of traders have a lot of issue where they lose a lot of money is that they come into trading wanting to trade all the time. They want to pull their phone out in the middle of work. And I'll be honest with you guys right now. If you were working for me and I found out you were pulling out your phone to trade them over, I would fire you in a heartbeat and I wouldn't even think twice about it. Why? Because you're on my time. I'm paying you to do a job, right? I can understand that you want to use your time to do that, but that doesn't benefit me. I want somebody in there who's serious about the job they're doing, right? So, I mean, some people get butthurt when I say that. I have nothing to say to you if you're going to get butthurt about it, right? You just have to deal with life the way it is. But understand, be realistic. Be honest with yourself about what you're doing and how you're doing it, okay? But you need to figure out who you are as a trader or investor first. And then from there, kind of move your way into it, kind of figure out, okay, where do I start based on that? Because if you try to do something other than what you are, you're not going to trade the way you need to trade to be successful. That's the problem. It's not going to coincide, right? You need to trade longer time frames and less trades, but you're trying to force in shorter time frames and more trades. And it never ends out well. It never ends up well. And again, a lot of new traders, when I'm first talking about this, they get offended and they get a little upset about it. And it hurts their feelings, right? But, it is what it is. The market doesn't care about your feelings. And to be honest, I'm going to be honest with you. Ready for this? I don't care about your feelings either. And I say that because I know that you can't approach the market effectively worried about your feelings from the market or from me, right? I know this. And hopefully you learn that so that you can be successful. See, I'm going to tell you these things that nobody else out there is going to tell you guys. If you never joined Texas West Capital, I've been doing these live streams here for what? Going on 8 years? 7, 8 years now? And so, I have people that have followed me almost the entire time and they've never joined, and that's fine. I'd love for you to join. I think we do great. I think you get a lot more, a lot quicker. But as long as you're coming here, I'm going to tell you the things you need to hear versus the things that you want to hear. Because whether you join us at Texas West Capital, or you join somebody else, or you just try and do it on your own, I want you to be successful. I want that to be what happens. So, if you want to kind of, just kind of push me off there, go, oh, whatever. And he's just saying it because of blah, blah, blah. I mean, feel free to do that. But hopefully you'll understand that really, I want you to be successful regardless of how it goes. And that's why I won't just tell you what you want to hear so you join. A lot of people haven't joined TWC because I don't tell them what to hear, what they want to hear. And that's okay. That is what it is. Okay? So let me see here. Somebody was asking about CRV. Let me see if I can pull this up here. How are we going to do this? Let's make a copy here. Okay. CRV USDT. We'll just do that. And I think that pulled up a different one that didn't show up, right? Okay. I'm going to have to share this other screen now. Since they're making me do this. And share this. Oh, there's a little thing that says share this tab instead. Look at that. Look at what I'm learning. All right. Well, this is ugly right here. This looks just like an ABC at the moment. Let me zoom out a little bit larger time frame. Let's see. So if I was to look at this as a 1 and a 2, that looks like 3 up. That looks like 100 to 123.6. Yeah, see that it looks like 3 there. I'm not really happy with it. Usually your corrective moves, which are 3 waves, are going to get you to the 100 to 123.6 area. When you're looking at 3 waves up is when it gets around 1.618. So based on this right here, I'm going to assume that this is 3 waves up. Now, as corrective, now that doesn't mean that has to be the end all be all. Give me a minute here. See, like even when I look at this looks like 3 up here. But it hit the 2618, so an overextension of wave 3 there. Let me kind of zoom out a little bit more here. What do we got going on here? All right. So yeah, so zooming out here, this looks like 1, 2, 3. And then you can see that we're getting hit right here at the yearly pivot. Now looking at this weekly, this could be a 1 with a flat here as a 2. So let's kind of zoom in a little bit here so you can see a little bit better. If this potentially becomes a 1 flat as a 2, then we have a 3, a 4, and a 5, and then we get a pullback. Okay, so this is looking better. Okay. So what I think may be going on here is we've got a 1 and a 2 and a 3, okay? And this is 4, and then we've got a 1 with a flat here as a 2, 3, 4, and potentially a 5. So we get 5 waves up into the yearly pivot. We get a pullback for 3 waves right here around this support area. And we should potentially be looking for this to rally up here. So again, 1, 2, 3, 4, 5. Let's take this down a notch here. Gives us this larger degree, 1, 2. So now all we're looking for is this wave 2 to complete on this pullback here. Now, if I'm looking at this, initially we got this large wick right here. So this is looking like, B up there. And see, and we'll zoom into the smaller time frame in just a minute here and see if that aligns with what we're looking at. But that means I would want, right now, before we zoom in, I'm thinking we need a breakout above this basically almost 76-cent area to add confidence to the idea that wave 2 is complete and wave 3 is in progress. Now, how far have we pulled back? We've pulled back right there around 61.8. So again, one of the places we usually look for on a wave 2, we'll look for 50%, 61.8, 70.5, and 78.6. Those are like our generic targets that we'll generally tend to look for on a wave 2 pullback. And let me just kind of get this set up here. Oh, come on now. Stupid thing. If that low is in, wave 3 would have a minimum expected target up here at about, come on, what the heck? There we go. I don't know what's going on with this. Okay. Let me do something here, guys. Give me just 1 minute. Let me shut off my browser here on my other one here. So this stops coming up. All right. So yeah, $2.13 or so is a minimum expected. What the heck? Minimum expected wave 3 target. Wave 5 up here about $3. Minimum expected. Now, based on the height of this pullback, how does that align? Well, we look for the 1618. And that's almost exactly there, just a couple of cents difference. So yeah, I mean, I look like that's where we'll probably be headed up there. And if we're up there that close to the R4, we'll probably hit the R5 pivot on the yearly here, get us up around $3.80, 85 cents, something like that, or even maybe a blow off top coming out of that. Now we zoom back in here to the daily. Let me see here. So again, that would be the 3, would be the 4, it'd be the 5 up there. And then here, there's A, there's B, and B got rejected right there at the monthly pivot. Usually your wave Bs or wave Xs will get rejected around the pivot. And so then 1, 2, 3, 4, 5 down here. Yeah. So we very well may be done here. Big count, we've got to get above that 70.7558 level. Locally, if we can get out above this first lower high here. So this market structure off this swing high is, you got a high, you got a low, you got a lower high, lower low, lower high, lower low, lower high, lower low, right? So you'll break market structure when it breaks out above 0.5937. So that would be the first point, the first structural point where you would go, okay, that low may very well likely be in. Going through 75.58 there will add confidence to that count and then have you working up toward that, that wave 3 target up there. All right. Does that make sense? So that's what we're kind of looking at there. Let me see here. So is break even good or not? Well, I mean, at the end of the day, you're doing better than, if you're break even, you're doing better than most retail traders, right? I mean, if most retail traders never become consistently profitable, all right, if that's the key, 95, 97% never actually become consistently profitable, then if you're hitting break even, then you're doing better than that. But as a trader, of course, you want to be on the plus side, right? You want to consistently lock in profits. And so like we got a guy named Jonathan over in the academy, and he joins us, every time for our live tradings on I trade live with everybody there on Mondays, Tuesdays, and Thursday mornings. And we usually trade the micro E-minis for the SPY. And man, oh man, he already had a system that he used and came in and did, right? But what he's picking up with us, what he said he's picking up with us is better risk management and better able to understand himself and his emotions so that he stops letting greed take away, because he'll get in good trades, he'll make great, and then greed will get in, and he'll get hit and he'll lose a lot of what he's made or more of what he's made, right? I've got somebody else who comes in from down in South America, and he's got an algorithm system that he uses. And he mentioned the other day that what he gets from being with TWC is understanding how to look at markets, and that helps him use his algo even better. And this is what I was this is what I was getting to when I talked about earlier. The more you understand about how and why price action or markets move the way they do, why prices move the way they do, the more you understand about that, the more effective your indicators, your algorithms, all these things become, right? Because you get a better feel for what's potentially likely to be a good trade or not as you're doing it. And it's huge, guys. It makes a huge bit of difference when you do that. Do I prop firm sometimes? I do a prop firm. That's what I trade live with. And I've been doing that for the last few months here. So I've passed a couple of evals here. I've got another account now that we're working with. And I've done it different ways. I've done it with a static. Most prop firm accounts that you run with, they have like a trailing stop. And it goes by how much price moves when you're in a trade, right? So even if price goes up and then comes back against you and knocks you out or you get out, right? you still have that how far it went while you were in that brings up that trailing stop, right? So I've done accounts like that, and I've also done accounts that there's a static, it stays this point, period, which is usually a lot closer. And then I talk about the different things that you have to understand about prop firms versus if you're trading your own money, right? So prop firms specifically are very risk adverse, right? And so a lot of times when people aren't getting paid by their prop firm, it's not usually that the prop firm, a lot of times it's not that the prop firm is just some shady thing. It's because the prop firm, you're acting in a way that's not conducive to consistent profits, right? So they have their rules about consistency and stuff like that, because what they want to see, what prop firms generally want to see, they don't just want to see you making money. They want to see you making consistent trades, right? They want to see you applying a framework to your trades. And you may think that's not fair, but honestly, at the end of the day, it doesn't matter what you think, right? You want to use their money to make you money. You have to play by their rules, right? So risk management is of the utmost, number one most important thing for a prop, if you're going to trade prop firm. The other thing that's so important, right, is that you have a consistent framework for which you trade, right? So like Fibbo, for instance, Fibbo has a system that he uses no matter what, right? And he consistently applies those trades, right? That's what they want to see. They don't want to have you in just getting lucky. It's great to make profits, sure, but they're putting, potentially their capital on line depending on the firm and, what's going on there. They want to make sure that you're consistent, or they're going to pay you real dollars. They want to make sure that you're consistent, right? Because what happens is when they find consistent traders, right, they'll usually copy trade them. I mean, this is part of the whole way it works, right? Now, there are some really shady there have been really shady prop firms out there. It is what it is. But a lot of times when you see people complaining about prop firms not paying them out, a lot of times it has more to do with them not following the rules, not being consistent, just getting lucky, stuff like that. But there's a reason, for all that in there. But yeah, so to answer your question, yeah, I use a prop firm every live trading that we're doing. I use it. And I talk about the differences again with trading prop firm money versus trading your own, because it is different, right? Because prop firms do have these things. You can't be as out there. Now, you can trade your own money like you would a prop firm's money. And honestly, over time, you're going to be most successful doing that. But again, that all comes down to creating a system for yourself that you apply consistently, right? That's what it's about. So hopefully that makes sense. Let's see. There's Fibbo Swanee. Yeah, I can see he says KB Swan, and then I saw his little thing by it there. But yeah. So, again, guys, if you thought about maybe wanting to do a prop firm or whatever, these are the realities of doing it. It's not just simply get in there and make some money and you're going to be so rich. They have stringent risk management, stringent requirements as far as consistency, stuff like that goes. Because if they don't, then they bring in anybody that's lucky, and then somebody gets lucky and they got to pay them out, but they're just really not a good trader. They just got lucky, and then they lose money, right? And the prop firm ends up losing money. So, but that, again, like I said, that's not all of them. There are some really sketchy ones out there. Let me see here. Michael Johnson, what's up, man? Yeah, my back, it's getting better there. It's getting there. Let me see. I got Circle. Oh, Alvin. Alvin says, what about me? I wasn't going to bring him because he's in the chat here. If you guys ever join, Alvin is so fantastic. You guys are going to love Alvin, man. So Alvin, like Andrew and like Vince, came in, just soaked up everything they could. And within a year, we're just becoming consistently profitable, right? And it's just about your mindset. And, how do you put forth the effort? Do you really do that? Alvin lives over there. All you have to say is Aussie, Aussie, Aussie. and then he'll reply back, oi, 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 right? So that's where he's from. But man, oh man, he keeps us updated on his progress there, and he's trading multiple retirement accounts that he's doing, and for himself that are up. He gave us a printout recently, and if you join, you'll see it in the chat back at TWC. But man, oh man, he absolutely killing it. But if you don't, or maybe you question the things I say, ask Alvin, man. He'll tell you what you need to do. He's done it. He'll tell you what you need to do to be successful. All the tools are there. It really is. How much do you apply to it? Do you come in and ask questions? Do you chat? Do you post charts with everybody? How much effort do you really put into it? I had a talk with our students the other day where we talked about when you're trading, or just in life generally, we tend to lie to ourselves. We tend to say that we're really putting in the effort when we're not, when we're like half-assing it or barely doing it. And in order to get really good at something, you have to put in the repetitions. You have to have the focus, the consistency, the effort, the discipline. You have to have all that. And you have to put in the efforts correctly, right? You can't practice doing the wrong thing. You'll get good at doing the wrong thing, right? But when you do, then you end up like Alvin, or you end up like Vince, or like Andrew Bennett. Vince and Andrew, two of our head traders over here. You end up like Fibaswani, right? You end up like me. You get consistent. That doesn't mean you're going to win it all. And a lot of times you're going to have less than a 50% win rate. But that proper risk management means that you're making, that you're winning more than you're losing. So your capital account consistently looks like that. It goes up. And that's the key, right? That's the key. You don't have to get half your trades right, guys. You can get a third of your trades right and still make consistent profits, have your account going up. But that's only because of proper risk management. So let's see, I got somebody asking about Circle and somebody asking about coin. So let's pull those up. I think I've got a Circle chart in here. Let me see. Yeah, let's see here. You guys should be able to see that. Yeah, look at that. Look at Circle, guys. It's huge, right? So I'm looking at this as a 1 and a 2 down here. And then it looks like, let me see here, the swing low here is 104.26. Right here is 101.26. Okay, so we get us a 1, 2, 3, 4, 5. So we almost hit the 1618. So if I'm looking at this on Circle, I've got this as a 1 and a 2, and then 1, 2, 3, 4, 5, or potentially a 3 and a 4. And we'll have a 5 in progress. The pullback right now is how far? Yeah, 38.2. I think we'll get the pullback down here toward this 172, 173 area. So again, you get your an A, B, C here. But if we're looking here, that gets us right here to this low volume node. So again, I think that's where we get. So I'm looking for a breakout here above wave B at 226.95 to add confidence to the count. And if we can get the secondary target, this 50% pullback around that S1 pivot, that would give us a pattern target for wave 5 up here at about $413.75. So yeah, so right now this is what I'm looking at. I'm looking at this as a 1 and a 2. And potentially a 3, a 4, and a 5 heading up here. So I want that breakout. I think we pull back here toward this, again, toward this 172, 173 area. And then we want to break out above 226.95 there. Should get us that move up to, pattern target there, 413.75. Let me see here. And then we were looking at coin, or somebody's asking about coin here. Let me see. Coin's been one we've made so much money on at the Academy. Oh my gosh, this one's been great. Because we've been talking about this one. Let me see here. Let me get back here daily. We've been talking about coin since way back down here, around that $30, $40 area. And we've had multiple trades along the way going up here as well. Recently, as you can see here, we've got this great move up. Let me see here. If we're looking at the, I mean, it looks like we're going to pull back here. Let me see. What's that daily look like? That daily's pretty up there as well. The question is this wave 4 or is this wave 5 heading up here? And so, what's that weekly look like? Weekly still got room to go on that there. Thought I had a different coin chart here. Let me see real quick. I think I've got a different one, a little bit more information on it. Let me see here. I think that one's it. Okay, yeah. Here we go. This is a little kind of pulled back here, but and 4 there. And then 5 went up further than the target here for wave 3. And so wave 5 may or may not be done here. We haven't really pulled back enough to know for sure. But if we continue to get some pullback here, we'll look at a pullback down here toward this 272, 280 area here at the top of this range. If we do, right? If not, we'll see this pop out a bit higher here, maybe get up here around that 413, 414 area. Maybe get about there. That would be my next target to the upside. But right now, we're just going sideways here. Not enough has really happened. It looked like it can be topped out. So we'll see if we can get that pullback down here toward that top of the range before it kind of heads up once more for a wave 5 on that for coin. But coin, man, just absolutely just looking beautiful. We had the pullback here to the monthly pivot and just took off like a rabid dog heading through there. So really, really liking what coin has done on that as well. Well, you got Fiboswani's got a 450 target on that. Yeah, and a good chance we could get that. You know, again, first target, the 414 kind of area here. But if it continues through that, we'll look up here around that R5 pivoted 459 or so. So yeah, could definitely see that as well, especially if we start next week looking like this here, right? But we'll see if we get some further pullback or if we're going to kind of, you know, just get a little bit more of a pullback here, maybe around 300 or 330, and then kind of get the rally up on that. So we'll just got to see which way it goes with that. Let me see here. Can I also do the Webull chart bull? Yeah, I don't know that I've ever done that. Let me see here. Okay. Bull. Yeah, I keep it in lowercase. Drive me nuts. 6. What's today? 27th? Yeah. It's going to be switching tabs here for y'all. Oh. By the way, if y'all aren't subscribed to the free newsletters I have, you should definitely do that. Got a lot of free, great information out there. Every Friday, we do the applied socioeconomic theory The link is underneath the YouTube video here. So we do applied socioeconomic theory every Friday. We do the market breakdown every weekday. I missed it 3 days this week because I was laid up in bed with my back. We've got every day. I usually do it a week ahead of time instead of do out. I have a trader's daily edge. So 60 seconds every day, you get one thing to focus on to make you a better trader. Kind of help you get away from all the noise and the fake stuff out there. Let you know what really, the things you need to know about different things as far as trading goes. And all those are free. You can get in all those. If you go to themarketbreakdown.com and sign up for that, usually it'll recommend those other two there as well. And you can jump up for them. Let me see here. So Webull, oh wow, what a move up and a move back down, huh? Crazy, crazy, crazy. Let me see here. Let's zoom in a little bit. Man, this is logarithmic. That's such a crappy move down. Let me see. I'm going to do this. It's possible it's a 1 with a flat as a 2, and then 3, 4, and 5. Or it's an ABC. I think it's 1, 2, 3, 4, 5 there. Let me zoom in a little bit more. Let me see. Okay, looks like a 1 and a 2. 3, 4. Yeah, 2, 3, 5. Oh, it's just an ugly chart overall. So what I would do with Webull here, because it's such an ugly chart, I would look for a breakout above 1151 to signal that that low may be in here. And then I would go with two targets here. Overall pattern target based on this whole pullback up here at about $12.39, or no, it's about right. Yeah, I'd look at the $12.30 to $12.40 area once you get a breakout above this 1151. Yeah, that's what I would look for there. The easiest way to do it. It's possible this is a 4 and a 5 coming up, but we need that breakout above 1151 to kind of add some confidence to that. This becomes a 1 with a flat as a 2, very large expanded flat. And so that 5 waves up gets you within 10 cents of that pattern target, which gets you where? Right here to the gap. Right up here into the, right through the low volume node into the higher volume node. Higher volume node, because we're coming from the bottom, should act as resistance. We should get more selling into it. So it makes a lot of sense where I'd be looking for on that right now. Let me see here. Yeah, it's a scalded cat too. Thoughts on HUT 8? Let me see here. HUT 8. Okay. HUT 8 is really an ugly chart for me as well here. I've kind of got it looking like this. It just looks like a series of threes. So this may be A of 3 or maybe 3 here, some sort of really like a leading diagonal, so like an ABC, and then maybe a ABC here is a 3, and then a 4, and then ABC is 5. But I think that that low is likely in. I think we've got 5 waves up potentially, so we're looking for a pullback toward 13.99 or 12.21 would be my targets on a pullback. We can see we're getting rejected here at that yearly pivot. So if we can get those pullbacks, that would have us looking at potentially 5 waves up here around 46 3/4. So I would do that. That would be my initial idea there, because again, if this is going to be 3 up for 1 and then 2, and then this becomes like a 3 up here, or even A, B, or WX, Y here is 3 rather than A. If this is just A of 3, then it's going to go up even further. But I like to look at the least the closest target, because that way, you know, you're not shooting for a real big high target and then it never gets there, right? If it at least gets to our lower target here around $46, $47 and continues up from that, then we can expand and look for it higher up there. But again, right now, it looks to me like we've probably got 5 waves up here. So I really am looking for that pullback to there. Yeah. Now, if we do break out higher, I mean, you know, we can maybe look here. Maybe on the weekly, we get a wick up around 22.68 pattern target based on the height of this pullback. Possible. So, you know, if it does wick out, you know, or does break out, look for that. But generally speaking, this yearly pivot is holding really well. We came back, bounced on it, then fell through, hit up, pulled back. So if we're pushing through it, we should remain above it for the most part. We shouldn't go like break out above here, you know, and close a candle up above here and you know, 2 candles or whatever, and then pull back down toward, you know, $12 or $14. We shouldn't do that. We could maybe, again, wick out and close back, or maybe get a close up there around that 22.68. And then the next candle, bearish engulfing, and come back down below. Because when you have those 2 candles overlapping like that, they work the same as what you would if it was just like a wick up and down. But I would expect that if, you know, if we were to break out here and close above it, you know, you get a impulsive breakout, large candle spread, large spike of volume, we should remain above that pivot there, and then we'd continue looking up higher. Breaking out above $29.28 is going to add confidence to that idea of that 46.75 target here. And if we continue up beyond that, you know, again, then you have that wave C up there closer to around 67.60. So you've got some targets along the way there as it goes. Okay. Let me see here. Let's see here. Fiboswani said he posted his coin chart on X if you're interested. So check him out there at Fiboswani. You guys can get him there. If you're not already following him, you should be, of course. Let me see here. Just kind of catch up with you guys here. Mind looking at Saul? Believe you reached your lower target on the pullback from the previous video. Yeah, let me check it out here. Open. Let me see here. Saul. Oh, yeah, you're right. It does look like it's hit it there. It dipped just slightly lower. Just right below it, it looks like. But yeah, a lot of the alts look like this. They look like they're 5 waves up and 3 back down. Let's see here. Based on this slightly lower pullback there, Minimum expected wave 3 target at 377.80. 5 up here at 480, 489. That's coming off this 1-2 here, which is the low. But again, I think we do have a flat here, A, B, C, expanded flat for our wave 4. We printed a spring here, got that pullback. And you can see that it pulled back right to the top of the low volume node where you would expect it to. Rallied up here. I want to break out above 168.36. This is Sol USDT on Binance. So whatever chart you're looking at, it's this one right here. It's around 168. Breakout above that should add confidence to the count. And again, on this wave 3 up there around almost 378. Wave 5, minimum expected target up there around 489. Just on this push here. So yeah, I'm liking that. I think that's looking pretty good there, Saul. Let me see here. So nice keeping up with that Colton Kirby, 9284. Let's see here. You're welcome for sure. TDOC, T-Doc. Let's see what T-Doc's got. Let's make a copy here. Man, I've been doing this chart since July 13th, at least July 13th of 2003. And I'm telling you guys, you should be, keeping date stamps and everything on your chart so you can go back and look at. And this is what I tell you guys when I say I don't like hide anything from y'all. All the charts that I do over the years are all available, and you can find them all. So that way you never have to take my word for it. If you say, hey, did you just wherever? I'm like, yeah, here it is, right? You can find it. Let's say 27th, right? But it makes it a pain in the butt for me trying to find sometimes the charts that are in there. But it just keeps everything legit, right? You don't ever have to worry about me going, I don't have that or whatever. Every once in a while, a chart goes missing. I end up, copying over it. I don't save it as a new one. I'm doing it too quick, but for the most part, they should all pretty much be there. Let me see here. That daily's interesting. What does that weekly look like? Let's see. Let me zoom. What's that monthly look like? There's a lot of volume coming on that monthly, that weekly there. So realistically, as far as structure goes, you're going to want to see a breakout above this last lower high here, 1521. If it goes above there, that breaks the bearish market structure, which is just those series of lower highs and lower lows here. You can see now we are currently sitting right there. See, what I like to do, guys, is I like to zoom out to the weekly or the monthly, find these significant areas of interest, and then zoom in from there. Because as you can see, this candle looks pretty good, but we're right here. We haven't broken out and closed above this all-time low that was over here, right? Where we gapped down below. Support resistance area, that's a significant area. This is this ledge here. If we can get on the top side of that, there's a good chance it's going to hold this support. So we want to see that. Oops. Get this to show up on all time frames here. Let me see here. Yeah, so I'm not overly excited about how this looks at the moment. It's possible this could be a 1, 2, and a 3 here. But generally, let me see here. Let me see what we got here. Because what we have here is we have basically looks like 3 up here. And then we could have 3 up here. Where's the swing low? 668, 671, 670. 673. Okay, so yeah, so we've got like an ABC, and then we've got an ABC right now. So locally, I'd put a range right here. This gives us a slight spring here, jump across the creek. As we start zooming in smaller time frames here, see here. We had a lot of volume coming on this breakout on the 3-day here. This next one pulled back to the top of the range and then bounced back out. So jump across the creek, show of strength, back up to the edge of the creek. Another show of strength here. Let's see. Yeah. So I would look at this as the range here. Again, jump across the creek, you have the big volume, large candle spread through the phase B swing high right here. Show of strength back up the edge of the creek, bullish engulfing candle. Almost. It looks like it gapped up a little bit here. Going to push up higher. So that might be 5-8 and come back here. We might look for a pullback down here toward this $7.50 area. This looks like a bit of a leading diagonal here. Let me make sure if this is going to be 3. Can't be the shortest. Let me see. 7. Yeah, I mean, this could be a 1 and a 2 here, and then almost too short of a 3. And then that would have to be a 4 right here. And we can see this pull back and maybe push up into this one more time before pulling back. But I think ultimately, we come back down toward $7.50. Yeah. Or like I said, maybe it gets like a 1, 2, 3, 4, maybe a little bit push out higher. But ultimately, I think we come back here toward this 750 to 775 area to get us a 1 and a 2. And then we pop out higher. This is really ugly here, but this does look like, look at this volume of price action. This does look like a jump across the creek, back up the edge of the creek, show of strength, which means this should be reaccumulation. So ultimately, we just get a pullback and then movement up there. Hopefully that makes sense. Let me see here. Take care, data. PCT. What's up, Mr. Campbell? PCT. Whew. I'm going to have to get going here in a minute. My back is absolutely killing me. Let's see what we can do while I can still hang out here. What do we got going here? Zoom out to the weekly. I mean, my first thought when I look at this, like I just counted right there, 1, 2, 3, 4. We'll see if this is maybe correct, but this is my first thought. But we've got a nice clean break above this weekly, so we would expect a pullback to hang out around that weekly there. I say weekly, I'm sorry. I mean the yearly pivot here. It's on the weekly time frame. So it should be about a 50% pullback, and it is. Okay. Let me see here. Look at that monthly. Monthly just getting that cross up to neutral there on the stochastic RSI. So this looks like 3 waves down. We did break out above this third wave, the second wave. So it should indicate that the low is in. Love the lows down here with that volume. That is absolutely beautiful. This is the swing low here, 450, not this over here, 451. That could be it there. Okay, yeah. So bigger picture, this looks like a 1. I'll have to put a 2 here. This looks like a flat correction. Looks like A, B, and then 1, 2, 3, 4, 5 here. So it doesn't show up really well here on the monthly. Let's zoom in a little bit here. Yep. 3 down, 3 up. 1, 2, 3, 4, 5. 5 waves up around the wave B extreme. I mean, it could push out up here towards 1690, but I think it's either done or just about there. And I would look for a pullback down toward this $8 or $9.50 area here. And let me, actually, I can do these like this, yeah. Oops. Yeah, so either it finished out here or it's going to push up into that $16.90 area, and then it'll pull back. But we should get a pullback down to the yearly pivot here as a wave 2. And again, it depends on where it does and exactly where it goes here. But, you know, potentially wave 3 up around $51. Wave 5 up potentially around $75 or so. And that should just be wave 3 here. Now, the other possibility is this would be 3 waves up for 1, 2, and then 3 waves up for 3, 4. And we'll get 3 waves up for 5, in which case, if this continues breaking out higher, you know, you can look around that $30 area, $29.80. And that would again say this is a 1, 2, 3, 4, 5. Let me make sure. Isn't the shortest there? No, wave 3 is bigger than wave 1. So yeah, you know, it could be a leading diagonal here. 1, 2, 3, 4, A, B, C up there around, you know, 29.81. So I would look at that first. And if it continues through that, I'd look up there around $51. But, you know, definitely looking for a pullback, either from, you know, the current swing high up there at around $15.50 or up a little bit closer toward that $17. Look for a pullback down toward, you know, 960 or so. And that could end up being an A, a B, or a 1 and a 2 and get those moving up. So, you know, we'll have to see which way it plays out. But, yeah, that's what I'm looking at on that. The fundies make this a boomer. You've seen similar. You sold 50% yesterday, but low buy said, no, yeah. You know, and that makes sense. You know, if you're in some profit, good profit, you know, and you're either not sure or you think there's there's a good possibility you might get a pullback. You don't have to sell everything, guys. You can sell some, right? And that way you're locking in profit regardless. And with the rest of it, you can decide if you want to sell it, you know, at a later point. But you don't have to just go all in on one trade and hold it until it's all done, right? So that's something else for you guys to think about as well. Alexander, I appreciate it, man. Thank you, sir. And that's it, guys. I'm going to get out of here. We're about 15 minutes over and my back is tapping. So I appreciate you all joining in. I was thinking I was going to get more chart requests than that, but a lot more important things to talk about there in terms of, if you decide that you want to be a trader, those things I talked about earlier, whether you go to us, you can get us at members.texaswestcapital.com. And you can join us there. And we'd love to have you there, Fibbo and I and Andrew and Vince and everybody. But even if you don't, the things I said earlier about the way in which you approach it, defining who you are as a trader or investor, all those things are of the utmost importance. Learning proper risk management, utmost importance, no matter how you go about this. Without doing those things, you're going to fall the way of 95 to 97% of retail traders out there. You'll just lose all your money and then you'll be upset. And then you'll say things like, oh, Wall Street stole from me, or crypto whales stole from me, or they manipulated me, or whatnot. You're going to come up with excuses why it's always somebody else's fault other than your own. But it was your fault because you didn't do the things you needed to do to become successful, right? To be successful as a trader. And that's why I share those things with you guys, okay? So as always, remember, the only thing you control is how much you lose. So please keep working on that risk management. I hope you all have a great day, great weekend, trade safe. If you decide that you do want to join, I think we've got 3 or 4 of our summer 2025. So you have to go to the annual, not to the monthly, to the annual on at members.texaswestcapital.com. Go to our group coaching, go to the annual, use the code SUMMER2025, and you'll get it for basically right now for what you pay 5 months for, basically. I haven't got around to get the price up. That's about to happen, though. I haven't got it because I hurt my back, but our pricing is going up, guys. So we're going up to $179 a month. That'll make it about $1,790 a year. But right now, you can still get it for monthly at about $97, or you can use that code if you're one of the next 3 or 4 to get in there, whatever we've got left. By the way, if we don't have any more left, it won't work for you. But use that code, SUMMER2025 on the annual, the group coaching, and you can get in for, I think it's like $553. And I was just going to do it for the first year, but it's going to be forever. So if you decide you want to stick around with us for another year afterward, it'll renew at that same low instead of going up to $1,790 or whatever. All right. Thank you. Yeah, I'm working on my back. We'll see how that gets. And we will have Beards and Bitcoin next Wednesday, 11 a.m. Central, 12 p.m. Eastern. And of course, don't forget Fibbo Swanee. I'm going to do a special show next Friday, July 4th with Fibbo. So he'll finally be able to be here. And he'll share his charts and his thoughts and whatnot. Maybe he'll have a good hot dog recipe. July 4th. All right. You guys have a great weekend. Trade safe. And if you do happen to join, man, say hi in the chat. Tag me, tag Fibbo, tag everybody. We love new people coming in. We love to meet new people and get them going on the right track. Take care, everybody. All right.